Welcome back everyone. In today's video, we're discussing Tesla's record-breaking earnings results. Let's get to it. By the way, Tesla stock is currently trading at $238, down 3.5% after hours. Let's see if that's warranted, shall we? By the way, Shamao says to like and subscribe. So yeah, what's the big news today? The big news today is FSD 12.5 not only rolled out to employees, it's rolling out to customers. So we got actual video of people running FSD 12.5. Now please note, this is not the highway stack just yet. It's still separated, city versus highway, but this is a vast improvement over the previous model. In fact, Ashok says, there was a huge focus on improving both safety and smoothness in this release. One of my personal tests is to not spill an open cup of coffee while on FSD 12.5. Was the first version where I was able to do that for 30-minute long drives. So it's a vast improvement over the previous versions. So moving on, what was expected this quarter? Well, what was expected was earnings per share of 62 cents on adjusted earnings on revenue of $24.77 billion. So what do we got? Actually, this is kind of interesting. The bot. It's a pretty cool picture of the bot just hacking away on the computer. So anyway, what's the news of this quarter? What is the huge focus on this quarter specifically that makes this quarter different from the other ones? Energy, or as they like to say in Star Wars, unlimited power. I don't know. I can't do his voice. But anyway, yeah, energy doubled this quarter versus a year ago at 9.4 gigawatts. These are the delivery numbers. So yeah, deliveries were at 422,000 for the Model 3 and Y, and 21.5 thousand for other models. That includes the Cybertruck. So yeah, let's get to it. Okay, profitability is $1.6 billion gap, $1.5 billion gap in net income, $1.8 billion non-GAAP net income. Now, please keep in mind that there's other charges of $600 million for restructuring. Cash on hand, operating cash flow is $3.6 billion. Now, free cash flow is $1.3 billion. Keep in mind that free cash flow last quarter was negative $2.7 billion. So that is a vast turnaround in free cash flow. It's very good because what Tesla is doing is they are spending this money. This money is not just sitting there. As you can see here, AI infrastructure capex was $600 million last quarter. So what Tesla is doing is they are spending this money, and they need this money to spend on many projects. You got FSD, you have Optimus, you have the new lithium refinery, you have the new car coming out, Robotaxi, and the new Model 2 compact car that's coming out. All these different investments Tesla's doing right now, and they're still free cash flow positive. Not only that, they have record cash on hand of over $30 billion. This is the first quarter Tesla's ever had cash on hand of over $30 billion. So what else do we have? Record energy deployments, 9.4 gigawatt hours. That's going to boost numbers quite a bit. Optimus began performing tasks autonomously in one of our facilities, and the Cybertruck has become the best-selling EV pickup in the US in the second quarter. So, it's official. Tesla has the best-selling EV pickup. So they have exceeded Ford. They have exceeded even Rivian. That was quick. Okay, what else do we have? In Q2, we achieved record quarterly revenues despite a difficult operating environment. The energy storage business continues to grow rapidly, setting a record in Q2 with 9.4 gigawatt hours of deployments, resulting in record revenues and gross profits for the overall segment. We also saw a sequential rebound in vehicle deliveries in Q2. Note the word rebound, so the deliveries are going back up again, as overall consumer sentiment improved, and we launched attractive financing options to offset the impact of sustained high interest rates. So yeah, on some models, they're offering like a 1% interest rate on those models to their customers. We recognized record regulatory credit revenues in Q2 as other OEMs are still behind on meeting emissions requirements. Speaking of that, I gotta make a video on GM's recent release of them cutting down on their factories. They're going backwards. GM is going backwards. Tesla is going forwards. Let's continue. Global EV penetration returned to growth in Q2 and is taking share from ICE vehicles. We believe that a pure EV is the optimal vehicle design and will ultimately win over consumers as the myths on range, charging, and service are debunked. Sounds like a political advertisement. Progress continued for AI initiatives. We reduced the price of FSD Supervised North America and launched free trials to everyone with the necessary hardware. These programs have demonstrated success and are laying the foundation for more meaningful FSD monetization. We expect to see an increase in FSD attach rates for our fleet as the capabilities improves and we increase awareness of the convenience and safety it offers. Overall, our focus remains on company-wide cost reduction, including reducing COGS per vehicle, growing our traditional hardware business, and accelerating development of our AI-enabled products and services. Though timing of robotaxi deployments depends on technological advancement and regulatory approval, we are working vigorously on this opportunity, given the outsized potential value. Concurrently, we are managing our product portfolio with a long-term orientation and focusing on growing sales, maximizing our installed base, and generating sufficient cash flow to invest in future growth. Okay, cool. That's nice. So what do we got? What are the actual numbers? Okay, so the actual numbers are automotive revenues of $19.8 billion. Energy storage, you can see the energy storage is up 100% to $3 billion. And this is what gave Tesla their record this quarter in revenues. Services is another $2.6 billion. That's another record. A big record. Look at this. 2.6 last quarter, 2.2, 2.1, 2.1, 2.1. That's an increase of 21% year over year. That's a lot of money. A lot of money. Okay, so yeah, total revenues were $25.5 billion. That is a record. So Tesla's growing again. Here's the actual chart of their revenues, gross profit, and operating income, including this last quarter. So yeah, they beat out these couple of quarters just barely, but they are growing again. Also, so just keep in mind though, energy, this is sort of an aberration. Energy is lumpy. Some quarters will be really high, some quarters will be lower. It depends on the installation pipeline. So the energy is not going to be this high next quarter. It's going to decline. So energy will decline. How that affects everything else, we shall see. Also, please note that operating expenses are up 39%. So Tesla is investing for growth. That's what this means. They're investing in many different areas. So that's why OPEX is $2.9 billion. And that's the main reason why adjusted EBITDA is sort of down year over year, down 21%. It's because they're spending. They're spending to grow and to grow huge. I think Tesla in the future soon will become the largest company in the world. We'll see. But anyway, let's move on. So yeah, net income is down 45%. Again, they're spending for growth. What else do we have? Free cash flow is $1.3 billion, which is up 34%, which is kind of a surprise given all the other numbers going down. And cash, $30.7 billion. What else do we have? Okay, so benefits to revenue were growth in the energy business, of course, Cybertruck deliveries, higher regulatory credit revenue, growth in services and other. By the way, what were the regulatory credits? It's on a different sheet. I'll get to that later. And growth in services and other. And negative factors were reduced S3XY vehicle average selling prices, decline in S3XY vehicle deliveries, and negative foreign exchange. So, okay, and it's basically repeated on profitability. So yeah, cash, quarter-end cash equivalents is $30.7 billion, sequential increase of $3.9 billion was a result of free positive cash flow of $1.3 billion, driven by an inventory decrease of $1.8 billion, and partially offset by AI infrastructure capex of $600 million in Q2. Okay, what do we got? This I just showed you in the previous form. Anything else here? It's all the usual. Tesla locations are up 20%, mobile fleet's up 7%, supercharger stations are up 23%. So even though Tesla axed their supercharger team, there's still new stations coming on board at a good clip, a very good clip, just nearly 200 units, quarter over quarter on supercharger stations, or 200 sites, 200 sites. Okay, so for installed capacity, that remains the same. Not much to say there. We continue to So yeah, Cybertruck production more than tripled sequentially. Oh, that's a big one. I didn't even see that at my first glance. So Cybertruck is tripled sequentially and remains on track to achieve profitability by the end of the year. Preparation of semi-factory continues and is on track to begin production by end of 2025. Let's see here. They're delivering to South Korea now from the China factory. Okay, here's an interesting thing. The European factory is delivering to Taiwan. That's odd. You'd think that would be coming from the Chinese factory. I'm not sure why they're doing that from the Europe factory. Oh well, that's it. That's just an interesting little note. But they're also increasing the deliveries to Israel, and they're beginning production on right-hand vehicles now, so they can deliver their first units to the UK. That's a very good improvement. Okay, what else do we have? We have FSD. So the installed FSD capacity they have right now is the equivalent of, what is this, 40,000 H100 GPUs is what this is. And then you got the cumulative miles driven for FSD. It's growing exponentially. So yeah, this is really good. And Tesla's going to be doubling their compute power by the end of this year. This will supercharge their FSD efforts. This will supercharge FSD to make it to give them basically full robotaxi capabilities. That's the goal here, is to achieve robotaxi. Because if Tesla can achieve FSD and robotaxi, they're going to be an enormous company. This is the gateway to becoming a huge company. Right now they're big, but they'll be huge once robotaxi comes around. So in Q2, we refocus on reducing interventions with FSD supervised while improving driving comfort. Notably, we rolled out a version of FSD supervised that primarily relies on eye tracking software to monitor driver attentiveness. We also increased the robustness of next-gen yada. Okay, so yeah, the south extension of Gigafactory Texas is nearing completion and will house our largest cluster of H100s yet. So, okay, so it's getting there. It's getting there. What else do we have? The usual. Okay, so in batteries, in Q2 we produced over 50% more 4680 cells than in Q1. That's sequentially. The 4680s have jumped 50% sequentially, quarter over quarter. And that's going to be primarily because of the Cybertruck. And continue to see cost improvements. In July, we entered validation of vehicle testing for our first prototype Cybertruck produced with in-house dry cathode 4680 cells, a major cost reduction milestone once ramped. Cost reduction across our product lineup remains a top priority. You can see here the enormous energy number. That is just massive right there. Energy storage deployments, kaboom! Oh my goodness. Now, again, this will decline next quarter and a few quarters after that, but that is just a huge number. It's a huge number. Anything special here? I don't say anything too special. All right, so what do we got? Volume. Outlook. Our company is currently between two major growth waves, the first beginning with the global expansion of the 3Y platform, and we believe the next one will be initiated by advances in autonomy and introduction of new products, including those built in our next generation vehicle platform. In 2024, our vehicle growth rate may be notably lower than the growth rate achieved in 2023. We're expecting break-even. Any differences there? No, I think, yeah, we're still expecting break-even. Okay, so yeah, they're still expecting first half of 2025 for their next vehicle, for the compact car / robotaxi. Utilize aspects of the next generation vehicle platform and aspects of the current platform. This is all stuff we know. Okay, so yeah, let's continue on. This is all unbox. Okay, so yeah, photos and charts. What do we got? BEV market share. You can see China is far ahead of the rest of the world, almost 12% market share for electric vehicles. So yeah, this is the data center factory for H100s in Texas. This is the under construction 10,000 H100 GPU factory that they're building. Well, data center, and it's almost done. But you can see it right here. Looks nice. Looks nice, and you can see the factory over there. What do we got here? This is the lithium refinery. I think this is the first picture we've seen of this in this particular state for this factory. This is going to start a production in 2025. This should be a high margin factory. So you got the Cybertruck coating shop. Looks nice. Model Y Quicksilver, Lunar Quicksilver, Powerwalls, Optimus. There he goes, working away. So yeah, with the Optimus, they got him working just little tasks inside of the warehouse, basically for testing. Yeah, this we kind of went over this. Just remember, Tesla is growing again. So yeah, we went over most of these numbers. Regulatory credits. Okay, so regulatory credits was $890 million. That's, I believe, also a record. But that's not going to last. That's kind of a temporary thing, but it helps in profits. Let's see, cost of revenues. I don't see anything else too special. Research and development, $1 billion. Actually declined a little bit from the previous quarter. Okay, go on. So yeah, remember, cash and cash equivalents are $30.7 billion. How much debt do we have? We have current portion of debt and finance leases of, let's see if I can read this right, $2.2 billion. And debt and finance leases net of current portion of $5.4 billion. So debt can be paid off today if Tesla chose to. They have tons of cash and very little debt. So yeah, this is a fantastic earnings report. So Tesla, what they did is they beat on revenues, and actually they came in below earnings expectations. But remember, they're investing. Oh yeah, speaking of investing, what's the CapEx look like? So capital expenditures are $2.2 billion, which is actually a decline from the previous quarter's $2.7 billion. So it's about in line. They're spending about the same amount as they've been spending traditionally, give or take. So yeah, great earnings report, and things should look better in the future. Remember, 2025, next year, is going to be the next growth phase when the next car comes out. The next car will come out next year, and that's when earnings will rebound substantially. And that's when revenues will rebound substantially. That's when the compact car will take hold and start ramping. It's going to ramp through 2025 into 2026. But yeah, fantastic earnings report. Nothing really negative to say. We expected most of this, honestly. The only real side effect, the only real thing that we didn't know was how much energy was going to be a benefit this quarter. Energy did fantastic. So yeah, don't forget to like and subscribe. Thank you for watching. Now we'll see you in the next one.